Welcome to Revenue Search. This is the Bittensor podcast where we dig into Bittensor and her subnets, asking all of the questions that everybody wants to know. What do you do? How's it going to make money? What are you going to do with that cash when you've got it? My name's Mark Creaser. My co-host, as always, Siam Kid. Siam, who have we got with us today? Look at this little change of format. You switched.
Yeah, we just thought we'd spice things up a bit. We're keeping them in the green room, the backstage. They're going to pounce on in a moment. We have Subnet 41 Sportstensor and two very lovely chaps. I have to add. I've got two sort of side stories with Sportstensor actually. So first of all, like 2 years ago, there was like a brick Tensor dinner. It was organized by Giles of Tensor, and there were a load of subnets in London. We all had a big meal, and I was an absolute idiot because I'd booked the last train home, and it was like 11 p.m. And so I had like a muppet had to leave early just as things were getting going. And there was a guy on the other side of the room I never got a chat with, and then he was really, really like sweet. I felt like a pretty woman being escorted out by this strapping chap, and he was a really nice guy. And because I'd met so many people, I completely forgot his name. And all this time, I was like, I wonder who that really nice guy was. He was like a subnet owner, and I couldn't pinpoint it. Turns out it was freaking Leo from Sportstensor. And all this time I've been chatting with Lucian on Twitter, and I didn't connect the two. Now, the other story is like a sort of a full flippening type thing where originally I didn't get on with a guy on Twitter called Neuromancer. And you know me, I like positivity. I just don't have any space for negativity, and he was a bit negative on a whole bunch of different posts. And I was like, dude, do you hate Bittensor? Or something like that. And then basically we got off on the wrong foot. And then we started DMing quite a lot. And then as I got to chat with Neuromancer more, I realized, holy shit, this guy he's real. He's like, probably, it's hard. This is a big statement because Jacob, the founder of Bittensor, is like a gigabrain. But I'd happily say that Stephen is probably the smartest person in the entire Bittensor ecosystem, which is, I know there's a lot of big brains in Bittensor. So let's bring them on stage now, because I think we should dive into their history a little bit. So I'm hoping this works. There is Neuromancer himself. Oh, wait. You guys need to be on top. There we go.
Oh, the Brady Bunch here. Like, hey. Hi guys.
So, first question: do you disagree with that comment that you are the smartest person in Bittensor?
Absolutely disagree with that. Please, please don't make my head any bigger. It's no. I just care a lot about Bittensor because I hold a lot of Tau, and when your money's on the line and you want Tau to succeed, you just want to tell the truth. And like I'm a little bit older than probably most people in Bittensor, so just tell the truth. Well, I'm not going to tell you that, but old enough that I remember the 80s, let's say, quite clearly. And I remember what it was like to live before computers existed, actually. So like, you should kind of put two and two together from that. And yeah, I just care a lot about making this the best it can be. Yeah.
Amazing. And Leo, how old are you? Sorry, no.
Rule number one, never ask a subnet owner their age. Rule number one.
So how did you two meet then?
Yeah. Serendipitous story here.
Yes.
Actually, we had launched Sportstensor last year in June, I believe, or July. And we had our incentive mechanism geared towards accuracy, and we were like, oh, this is going to be great. And then Stephen came along. We saw Neuromancer talking in another subnet, talking about how the incentive mechanism of that subnet is not correct per se. And so I hit him up. I just DM'd him and I was like, hey, can you like explain more about what this is about? I was just more curious, obviously, and I recognized the intelligence and experience Stephen had. And we just started to talk and get talking. We clicked, and then I was like, "Hey, why don't you come and help us with our incentive mechanism?" And so that's kind of how we met in a short 2-minute story.
We'll take the short 2-minute story. Simon, have you got any more chit chat that you want to bring into the front of this, or can we get going?
Well, I would like to dive a little bit into their background because Stephen has an amazing background, and Leo is the lovely guy that I couldn't remember the name of. And again, I want to know more about your background, which is a bit weird. We don't normally do this. It's a bit like my date.
Yeah, exactly.
Change to the format, but sure.
I've had one too many copies today. I think that's why.
We should just call this. We'll call this Love Island, shall we? No, I'm joking. Stephen, go take it away. You start.
Oh, sure. I'll give you a brief intro to me. So, I guess, yeah, I went to school. I did physics and economics. So I did 2 undergraduates, physics and economics. And so I learned a little bit about how business works and a little bit about how the world works, the fundamentals of it. I got lucky enough when I left working in university to get a job in Vancouver here at D-Wave Quantum Computers. So I spent a couple years there just because I was working in quantum physics for a while, and we built a quantum computer, the world's first commercial quantum computer from the ground up. And that was quite an interesting experience to take everything you learn on a chalkboard and actually have to apply it in the real world and build something commercial. So that was a really nice experience. Goldman Sachs came and basically took it over. So the CTO of Goldman Sachs became the CEO of D-Wave, and a great learning experience. I moved on from there to Amazon and worked on AI problems, computer vision, just well before there were computer vision libraries in Python and tutorials and all that stuff. So did a master's degree in statistics. And then I moved on to sports betting. I found a love for that. Started working at a bunch of desks, did a startup company, sold that to a company in Vancouver called Fans Unite, which went on a big campaign from 2018 to build on Ethereum, to build a DEX on Ethereum. It didn't quite work out because of COVID, unfortunately, but we ended up going public with that, an IPO, which was nice. And then D-Wave IPO'd last year after 20 years. So that was like a really nice feather in the cap. And then just investing in crypto and ended up in Bittensor. Yeah. So that's kind of my journey.
Amazing.
How did you find Bittensor, Stephen?
Well, I am an AI professional. Well, AI is just statistics, really, in the end of the day. And then I just love statistics and AI. And then I saw this crazy little website with the Bittensor cloud. And I'm like, what is this? This is amazing. And I should go look at it. And it was $8. And I'm like, this ain't going nowhere. And then I ended up buying it like, 80 or something like that. So that's my fault. I should have had more conviction at $8 when they had that cheesy DEX. You remember that little cheesy DEX at $8, and you couldn't even barely buy anything.
Yeah.
And so that was how I found Bittensor. But yeah, cool story.
What about yourself, Leo?
Yeah, I'm a career branding marketing. I found crypto back in 2017 when kind of Bitcoin was blowing up, Ethereum was blowing up, the whole ICO phase. 2018, I lost everything because of the whole ICO boom. So I'm like, okay, I'm not touching crypto ever again. And then 2019 came along, COVID came along, and I was like, oh, what harm could do if I just get back into crypto now anyway? And went pretty deep into DeFi summer. And that's when I started building within the space as well. I'm getting very well acquainted with builders and DeFi spaces specifically. And yeah, funny story, how I found Bittensor was I saw that, oh, this is like the AI token, right? Like it's back in 2020, I think 22 or 23. And I was like, oh, I would love to be involved in this, but it was like $100. And I'm like, I don't, like you, Stephen, I was like, no way, it's $100. But I heard you can mine it. And I was like, all right, I have no experience in mining whatsoever, not with Bitcoin, not with Ethereum. But I wanted to get into Bittensor mining. And I found a project that promised to mine for me if I support the tokens and staked it. Turns out I got rugged. I got rugged for a lot of money, but it was amazing because what it did was it forced me to go, you know what, it can't be that hard to actually mine, right? These guys just sold me the dream. So that's when I entered Bittensor, the Discord server. I started talking to everyone. I started trying to learn as much as possible to start mining. I became a miner on Subnet 27 back then, which was compute, and just started playing around with different subnets. That's how I got into understanding how subnets worked. And I was like, oh, I want to, you know, one day have a subnet, right? That would be amazing. I have a lot of ideas, my experience with business, and I had a couple of startups before as well. So I thought I could apply that to start subnets. And yeah, so I'm really just a guy with a dream and a subnet. So if you're listening and you have a dream, you could be up here talking to Siam and Mark as well.
Amazing. So yeah, like what is Sportstensor? We have to get to that question now.
We do, otherwise we're going to be at our 15-minute limit, and then we'll get into trouble.
Yeah. And that limit was gone for like a long time, right? I mean,
It's gone. It's gone. Even the joke's not funny anymore, but I'm still going to keep wheeling it out. No, these things are cyclical. It'll be funny again, Nick. That's, I reckon. People will be rolling around.
Yeah, no, I agree.
What is it? What's Sportstensor? Tell us about it.
Yeah. All right. So, I mean, Sportstensor, yeah, once again, we started, you know, June, July last year. Stephen came on board and we really kind of dove deep into like the incentive mechanism on what we think, you know, would be most applicable to Bittensor and how it works. And what we have been doing is essentially incentivizing miners to build models, machine learning, AI, whatever that they have, using whatever data that they have to predict the outcomes of sports matches. You know, we've been doing that. We've been getting some pretty decent results. Last year, well, actually last NBA season, we did 14% ROI with a 4x on capital. With MLB season, we averaged around, you know, 5 to 6% ROI on the dollar. So what that really tells us is like the incentive mechanism it works, incentivizing miners to do things that they probably normally wouldn't do, actually works, right? So yeah, I mean, that's kind of like the high level of what Sportstensor was doing. And actually I'll let Stephen kind of go dive a little bit deeper into the, don't get too technical, but you know, talk about the interesting stuff.
Yeah, okay. So I can tell you a little bit about kind of like how we're transitioning to work in prediction markets, which is, you know, of course, that's the hot narrative right now, is that you have these marketplaces that are decentralized like Polymarket that are arising and they're displacing the TradFi sportsbook business. That's you know, some say it's a, you know, a $250 billion per year turnover business, you know, revenue, right? And so it's quite a really, really big industry that's being disrupted by these crypto native prediction markets. And so we're rejigging kind of our approach to go from making predictions and pushing that rather to incentivizing volume to go into these massive markets. So you've all heard of Polymarket, obviously. And, you know, I'm a big believer at Amazon. When I worked for Jeff Bezos, actually, he would talk to us a lot and he always told us to obsess over the customer. And if you obsess over the customer and the things that they need, and you do a good job and solve their pain points, that will lead to revenue. And so that's, you know, kind of contextual. That's pretty good for revenue search, right? So in Polymarket, we kind of know what they need and we're trying to solve their principal problem. And our job is really simple, guys. We're trying to push real winning flow volume to Polymarket so that the signals, that the inference that these miners create sharpen up the price of those markets, right? Because that's what Polymarket really wants. They want to find the true chance of an event's outcomes. That's their modus operandi. That's their goal. So we know that's what they want. Number one, because they told us directly that's what they want. So that's pretty good when they tell you directly what they want. But we also know that in their business model, they charge a 0% fee for you to take positions in these priced markets, these information markets. And when they do that, they have an automated market maker there. They're trying to incentivize information to flow like a river into their system so that they can be the sharpest possible truth tellers out there based on probability of some outcome, right? So that's what they really want. And so our job is to use Bittensor to optimize for that what they want, that true winning volume staked in US dollars flowing into their system. So we try to solve that problem by building an optimization. So all subnets are optimizations. They're trying to optimize for something to do a little bit better than a centralized market, to maybe solve a code problem a little bit better with an agent, or to incentivize storage to be a little bit cheaper than Amazon. Well, maybe a lot cheaper now that I watched your last hippiest one. But that's all subnets really are. And so we're trying to optimize to max out that qualified volume to Polymarket. And qualified volume just means those bets that actually win, because we don't care about the losing bets, right? We want those bets that actually win, because when they win, they inform the market and they help sharpen that price and they get to the ground truth of the probability of an event's outcome. And that's what Polymarket does, right? They're the ground source for truth, or that's what they're trying to be. So we developed an incentive mechanism. Now it's very mathematical and I don't want to get into that, but I'll get into the broad picture. We're maximizing that qualified flow, push it like as much as we possibly can. And we're buying that flow with the Bittensor emission. So Bittensor gives us some alpha tokens, and then we pass those alpha tokens to the miners and we're buying their qualified flow. We're incentivizing them to bet and win. But there's a second part to the optimization, and the important part is that we want to minimize the cost of buying that qualified flow. So it's two steps. Okay. One, we're trying to get as much winning flow as possible. Two, we're trying to minimize the cost of buying that volume. And when you do that, you get a very, very powerful system. And we introduce a couple constraints to that to make sure it's principled, because you need guardrails in an incentive mechanism. Otherwise, miners will take advantage and they'll go. So in our version 1, we saw miners try everything to game our system. And so in this mechanism that we created and published, you can go to our Git book and look at it after revenue search. You can look that, we set up some guardrails to make it principled so that miners can't, game the system or try to take all of the volume for them and like leave none for other people, things like this. So there's guardrails. So you might ask kind of like a little bit about what those guardrails are. So I'll try to just really quickly go through those because they're very important and they make the incentive mechanism principled. And, of course, we have a budget. We don't want to go over budget. That's a principal guardrail. We pay for proof. We don't pay for promises. And so basically, if the miners aren't winning, no tokens. We don't give you any tokens. You have to mint, because you have to sharpen the signal. That's what Polymarket wants. If you're not betting, if you're not pushing any volume, no payout, because you don't have any skin in the game. So your signal is not real. You can just flick a coin and give us a signal. It's not real. So we need volume. And we don't really value tiny or reckless bets, like super large bets that blow up your bankroll, or really, really tiny, like 13-cent bets or something like that. We don't value that because they don't count, because they just don't really have any skin in the game, or they have so much skin in the game that your signal can blow up. And that's like the last thing Polymarket wants, is like you're getting signal and then you're so reckless that your signal just blows up. It's like betting all of your money on Tesla, and then Elon Musk says something and then blows up your whole system, right? So all these little constraints that we introduce, we make sure that we also don't pay for spurious signal. So imagine all these miners are kind of there and they're trying to make bets, and nobody gives any inference. We're not going to pay miners just for existing, but a lot of clients do that, right? They have to push that alpha somewhere, and then you got a whole bunch of spurious miners that are not producing artificial intelligence. They're not producing inference with signal, and you can't push alpha tokens to those guys because they're not they're not envisioning the end goal of what the customer wants. In our case, it's qualified winning information, right? So we make sure that we just don't pay, and we're going to move that budget along until we find that signal. And we make sure another important thing is to make sure that the miners don't hog all of everything, like winner take all, right? Because when one or two miners take all of the reward and the rest don't, what happens is your signal gets very brittle and it can shatter because they're overfitting to the score, which is a fancy way of saying they're gaming the incentive mechanism. So we just have a hard constraint where we spread out that signal over many diverse miners so that Polymarket enjoys many approaches, diverse approaches and attacks of these guys trying to price the market better than everyone else. So, and then one last constraint is we make sure that, it's not really spiky, the amount of alpha tokens that you can take from our incentive mechanism, because we don't want it to go from 0 to 1 to 0 to 1, and they're just going crazy, and it's smooth and consistent. So we have what's called a ramp constraint. Very smooth, very consistent. From every block in the Bittensor blockchain where you're competing for that little bit of reward, your amount of pie that you can eat from the share just grows slowly or it decays slowly, depending on if you win or you lose, respectively. So when you put all that together, that's what our incentive mechanism does. We're pushing those two things: max qualified volume for the minimum cost, and then with those principal constraints. And when you put it all together, it's a very powerful system that gives kind of a unique innovation. And I'm going to share that innovation with you now. So winner scale, losers fade, as I said. You have to prove your edge. And the true innovation in what we have done is we have created the first incentive mechanism that is anti-dilutive on Bittensor. That is, we will never pay more in alpha tokens than the revenue that we take from the qualified volume that we pay for. And that's a very, very powerful thing that's never been done before. And it's possible because we embedded that in what's called the convex program, just math talk for a very principled optimization. And so it's provable on chain that the system that we're launching is anti-dilutive, or not hurt the tau holder. It does not cheapen their tau over time through the emission, right? So in the end of the day, Polymarket gets what they want. They get steady conviction, weighted volume, deeper, cleaner markets. That's really important. And we get what we want, which is maximize flow, which we can charge a fee on. But I'll let Leo talk about the revenue. That's what he's good at. I'm good at making sure that we're not paying more for the thing our customer wants. So I'll pass it to you, Leo. You can talk a little bit about how we turn that volume into revenue, which is what we're searching for, I think.
Yeah. So thanks for listening to Novelty Search, guys. That was very... No, but that's why, Steve is, considered one of the smartest guys in Bittensor, because he really understands what Bittensor needs and how a subnet is going to answer that need. And I want to just kind of take a step back here, and I see Mark, Siam. The question is do you guys know what a prediction market is? Right? That's the first question. Mark, do you know what a prediction market is?
Okay. I'm about 10 minutes behind here, and I'm hoping that someone's going to catch me up.
Yeah. So okay, I'll help you get there. So a prediction market is essentially like a market where people trade on speculation on an outcome of an event, right? So let's make a market here. Let's just play a game. I want to make a market. I want to see Siam versus Mark in a basketball game, right? Who's going to win? What are the probabilities, right? So this is the market. Sorry, okay, Siam thinks he's going to win. Mark, do you have confidence in yourself that you're going to win? So
No.
No, okay.
I'm going to get injured in early doors. This is not going good
for your odds, not good for your odds right now. So let's just say Mark at 25% chance of winning, Siam at 75% chance of winning, right? So this is the market. And when you bet into the market, or when I decide, I go, you know what, I think Mark is actually going to win. I put in some money into the market. I buy Mark is going to win shares. So your probability reflects the price. So your 25%, if I put in money, it could go up to 26%, 27%. So the more money that goes into your side, it balances out. But if everyone believes Siam, more money goes into Siam's side, your probability goes down.
Yeah.
Right. And Siam's goes up. So this is a very simple explanation of what a prediction market is it's sorry, it's that Siam, your
Mate,
inner system.
That's the best example. That's the best explanation I've heard of Polymarket ever.
Yeah.
That's really good.
I appreciate it. Thank you. But yeah, so Polymarket is just a ton of these different markets, which are they cover politics to news to sports to culture to venture markets. So they cover a whole wide range of things. And what we see the value is essentially is like the information within these markets, right? And let's go back to the same example: is Mark versus Siam. Mark's the 25%, Siam the 75%. And that's all the information we know is from face value. We see you guys. But let's just say, Mark, you and I, we go have a beer and you're telling me you're practicing really hard on your 3-point shots. You're training really hard, right? And you're really taking this seriously. And so for me, that's information that I go, you know what? I think that Mark actually has a better chance than 25%. So now I start betting into the market on Mark winning. And you see the odds change. You see the probabilities change. And so what that really tells us is there's a lot of information that goes through the markets through the price changes, and that we can capture that information, right? So there's things like, will the government shut down? The US government shut down by the end of 2025, or who's going to be the next president? These kind of markets where information is actually important to people, that's where we see the value is like, if we can capture that and if we can further incentivize that, then we have a very powerful information machine, right? Aggregation, generation, and then we can take this information and we can pass it on to the people who want to use it most, with VCs, hedge funds, whatever they want to. Any market that they feel they need information on, they can come to us and we can incentivize that market, drive people to bet and to research into that market. Like, for example, if I wanted to get better odds, or if I wanted to win on that, market between Mark and Siam, I would go and I would speak to Mark. I would go and I would speak to Siam. I normally wouldn't go to London or go to the UK and speak to you guys, but I really want to win in this market. So it incentivizes me to go and find that information. It incentivizes me to build a model that tracks Mark's calorie intake and tells me if he's actually, practicing, or if he's actually training, or if he's dieting for this basketball match. And so that's what we think is like the value here. And that's what Stephen has built this incentive mechanism to incentivize and for us to collect as a platform.
Okay, before we move on to Sportstensor, let's stick with this analogy. Do bigger bets push the odds more than smaller bets?
Yes.
But what if you're just like an idiot YOLOer but is rich?
Yeah.
So is that the signal then?
Yeah. So this is once again one of Stephen's reputable designs, is that you have to have previous qualified volume, which means that you need to have a track record, a history of being able to provide information into the market. If you're just gambling, if you're just betting, and you get YOLO, I'm going to put $100,000 a Mark, you have no history of that. Therefore, your signal is not real, or it's valued very little in our incentive mechanism.
Okay. So
We're not going to pay for it. Yeah.
We're not going to pay for it.
So closer to the strike time, obviously the probability gets higher of whatever the outcome will be.
Yeah.
And so you've got sort of like a shrinking ice cube of opportunity, where way out of let's say take our basketball match, a month before the match, technically you're way out of the money, so the odds are better for you if you're going to get the correct answer. So
correct. Yeah.
Is the cadence of change of the odds important then for you guys, or not?
Stephen, do you want to cover that?
Yeah, for sure. I mean, you're right. The closer you get to this, I guess you would call it the strike time of the prediction, the more information is factored into the line. So it's harder and harder. It takes more and more money that you have to push to move it one extra marginal, like a cent or a pence or whatever it is. So you have to understand that kind of what we're incentivizing is we want that winning volume. And so if you bet far away from the event, you have more edge but less information. So it's more volatile. but you have more chance of getting a really big difference between the strike price and the price that you push onto the market. So you can get a really big ROI and a big incentive score with us if you do that properly, but it's risky because information changes over time. Now, if you wait to closer to the time, you can take a much, much bigger bet at bigger volume, but it's harder to get a higher ROI. And part of our incentive mechanism is we score ROI. That's one of our constraints. And we score the amount of volume because that's your conviction in the bet. So we measure both. That's why we have a two-step system, is we measure both, basically. That's the answer. So it's embedded in our IM. Yeah.
So if there's someone that's really risk averse and just waits to the last second or a couple of minutes before, what is the proper terminology of the time?
Resolution of the event. Yeah.
So let's say you have a safe better and, only bets on the winning horse, when it's like 70%, just before the resolution date, and therefore always wins, but obviously very low risk to reward ratio. Would that person be considered a qualified signaler or better in your, but no?
Well, the thing is, if they have ROI, then great. That's still considered. There is some signal in there. But if you continuously just bet along the market or bet on the favorites, your ROI is going to be very small compared to the volume that you bet. And because of that ratio also, and because of the way that we calculate that, you will still be considered as someone who might have intelligence, but we're not going to be rewarded as someone who would kind of be able to predict much further out with much less information and return a much higher ROI. Yeah. And so I just wanted to make a point, is that you were talking about strike prices and options and everything. Like this is why prediction markets are actually blowing up right now. And the adoption is so high is because you ask the average person what a strike price is, maturity level, options, they have no idea, right? But if you ask them, do you think Taylor Swift's going to get married by the end of the year? They might have some idea, right? So there's the fact that Polymarket and prediction markets kind of open up the markets to everyone and make it easily understandable and easily adoptable. That's what's driving a lot of people to use it and to try it out and to put their information within these prediction markets.
Okay. So sorry if Mark and I are way behind the curve here. So Polymarket, obviously, they want as much volume as possible on all bets that they have, and they value the ground source truth.
The truth.
They're all the ground source truth or whatever are from good signals that you're providing or anyone that is providing. So they'll happily pay. So how do they pay money for that?
Polymarket pays nothing. Polymarket charges 0%, and we're the ones who pay. But if we go into the whole revenue search part, our partnership with, sorry, Simon, did you have another?
No, you. As you're talking.
We're moving into the revenues part of the search, which is our partnership with Polymarket. Because they charge 0% fees, right? They've allowed us to build on top of them and charge a 1% fee, right, on volume. And so when we trade, so anyone who trades on the platform that we provide, they pay a 1% fee on the volume. We collect that 1% fee, and then we pass that volume onto Polymarket. And so Polymarket wants as much volume as possible. And we told them that, hey, we can give you that volume if you work with us and let us be able to charge a fee so that we can service our alpha token, right? So all the revenue that we get from our 1% fee goes to our alpha token. Just buyback, that's it, right? We don't keep any of that. And the beautiful thing, sorry?
You burn it then?
We can burn it. Yeah, we can buy back and burn. We just have it, and we don't really need the use of it, right? We have our owner's emissions. We operate off that. We'll probably burn it. Doesn't matter. Or we can offer it as further incentive for whatever else other challenges we have down the line. But what we're trying to do, and what Stephen's kind of beautifully built into the incentive mechanism, is that once again repeating what he said, is we don't pay our miners any more than the fees that we get in, right? So I'll repeat that. We don't give our miners more money than we actually receive. And that's something that is, the innovation that Stephen has talked about, is if we earn $1,000 of fees, we only pay out $1,000 worth of alpha tokens to our miners. And so our miners are actually earning only as much as they can bring in. They're all employees. They're all trying to help us earn more money.
But
And so
how do you do that? Like, because the protocol pays the miners.
the protocol pays the miners through the incentive mechanism.
Yeah.
And we've designed it so that, for example, we have, like, let's just say 1.7% emissions, which means it's total around $15,000 a day within alpha tokens. And so we have 15,000 that we can give to our miners, right? But let's just say the miners are only earning us $1,000 a day. What we'd do is we would burn the 14,000 and we distribute the 1,000. So therefore, 1,000 goes to the miners, 1,000 in fees come in. If 10,000 goes to the miners, 10,000 in fees come in.
Okay, so I think you're highlighting probably a technical knowledge flaw on my behalf. So I didn't think the subnet owner could control it that well. Like, I'm looking at your miner emissions per day at the moment. It's 55.99 tau per day worth of alpha.
Yeah.
You get to, I thought that was automatically just distributed to the miners, but you're saying you can basically meter out what actually goes through.
Correct.
Even if all 256 UID slots are filled.
Correct. Yeah.
I didn't know subnet owners had that ability.
So the subnet, that goes through the incentive mechanism, right? And it's the code that the validators run the code. And so if the emissions goes through the subnet, and then it reaches the miners, and in between we've built the incentive mechanism so that it's like a dam or a gate that just goes whoop whoop whoop. It's like, okay, we've received $10,000 in fees, therefore we will allow $10,000 of alpha emissions to go out.
Are you the only subnet that meters out the miner emissions like this?
To our knowledge, yes, but if you're doing it out there, subnet owners, don't kill me for this. But to our knowledge, yeah, this is what
okay. So that's why I haven't heard of this before. Well, that's really cool. Won't some of the miners get pissed off? Because, like, let's be honest, a lot of miners across a lot of subnets are milking it for not really doing much.
Yeah, exactly. Well, the thing is, the benefit of what we're building is that we're using Polymarket as the liquidity layer, right? So what happens is the trades that come through us go onto Polymarket, and they're real trades. We're expecting our miners to make real trades, have real intelligence, build real models. So if you're trading on these prediction markets, you're winning or losing, and you're already earning your ROI and you're earning money. You're earning real money based on your own trades. What we're doing is we're adding additional incentive, which is the alpha tokens. And so we're almost like super boosting what you can earn while trading on Polymarket. And so if I was to tie this back to our previous incentive mechanism, where Sportstensor was incentivizing our miners to build machine learning intelligence on sports outcomes, this is akin to them actually betting on those predictions themselves and getting a real ROI. Whereas before, we were inferring their ROI based on the odds and what they're betting. But now they have to bet real money, right? Because that's skin in the game. That's like, we can't just have you coming in saying that, oh, I would put money on Mark to win the basketball game. No, if you put $100 actually on Mark winning the basketball game and you win, that tells us you have real conviction, you have real intelligence, and you have real edge. And we are paying you for that to keep coming onto our platform and keep betting, keep giving us that information. So the thing is, like, this was one of the big issues with prediction subnets in the past, where there was no collateral involved. There was no skin in the game. So miners would just make predictions and make money, and sometimes they'll win, sometimes they'll lose the predictions, but there was no skin in the game. The only skin in the game was your registration fee, perhaps. And then, Subnet 8 fixed this. They introduced collateral contracts. We've done it differently, which is leverage the infrastructure that Polymarket already has. to require our miners to have collateral in their trades.
Interesting. Yeah, this is novel because like one of the questions that all subnet owners face is how do you reduce the amount of miner emissions that slash into your lick pool every day?
Yeah.
And you can either do that buyback and burns or all these different alphanomics that we're seeing like with Hippias, etc. So this is another completely novel way of attacking that question.
Correct. Yeah. I mean, it's simple, right? I mean, every subnet owner is trying to solve the same thing is the amount of alpha emissions come out, you need to generate revenue to offset that so that there is no kind of like downtrend in your chart. And, I already know that a lot of subnets are doing this. We feel like we're kind of positioned in the way that one, the incentive mechanism makes sure that we offset all miner emissions. And two, the revenue that we can get from this is astronomical. And, I'm not even kind of like overstating that. We with prediction markets and the way that things are going, it's tens of millions, almost hundreds of millions of dollars of volume per day that are going through these prediction markets. And none of them are incentivized like we are, right? So if I'll give you some examples, right? Kalshi, which is a prediction market, just yesterday did $110 million in volume. Polymarket did $44 million in volume. Crypto.com did $13 million in volume. Novig, which is a sports-specific prediction market, did $6.9 million in volume. So we're talking multiple millions of dollars of volume per day on a lot of these established prediction markets. And we have Polymarket behind us, right? So that's the whole part of the partnership is that Polymarket's going to push us. They're going to support us in marketing. They're going to connect us with their best traders. They're giving us direct communication with their head of markets, which means we can actually create markets on Polymarket for us to incentivize our miners to go trade on, right? And so what this means is like we can actually create a market for every single prediction subnet that we have. We can create additional weather markets for Zeus. We could create more crypto markets for Subnet 8, Subnet 35. So we can do that. That's the whole power of this partnership is that we have Polymarket hand in hand. They work with us and we work with them.
Oh, wow. So like take Synth, for example. If there was a particular betting set that they were really, really freaking good at, you could create that new market.
Correct.
And then you go hand in hand skipping into the...
Yeah.
That's cool. Okay.
Yeah. So then, so essentially like we can create all of this, right? We've built this platform and what we're going to share is essentially we had a platform called Almanac. We created a front end for our intelligence beginning this year, where you could access miners' predictions. It's called Almanac, referencing obviously Back to the Future. And we're now transitioning that into a prediction market layer on top of Polymarket. So we would be essentially a prediction market ourselves using Polymarket as the liquidity layer or the partnership. And we would create markets as well within our prediction market, once again, with Polymarket to allow subnets to trade through our prediction market. Subnets, agents, other companies, other individuals, traders, etc. They will all go through our Almanac prediction market layer. And that's where we're going to collect all that information. That's information that's valuable for us, for hedge funds, VCs, companies who want information on particular markets. That's the value that we can bring to them.
So Synth would be a miner for you guys then?
Correct. Yeah. We could turn every prediction subnet into a miner. Yeah.
I get it. Okay. And so this is like a proper Polymarket partnership, not like one of those, like sometimes you see companies just dishing out like, oh, here, you can put our logo on your website or whatever. It's kind of proper, you're working together properly.
Yes. Yeah. Correct. Yeah. So I'll give a big backstory, just a very quick one. We were pushing about $500,000 in volume through Polymarket based on our MBA models that we were getting from our subnet. Because we were pushing such large volume, Polymarket reached out to us thinking that we were a market maker. And they were like, hey, how can we help you with the market making? I shared all this already on our X, but we got to talking, and I said, hey, let's get on a call. Like, I want to be able to talk to you about like what we're building, could be very interesting. And yeah, we essentially just told them what we're doing. We have this amazing blockchain that we're on called Bittensor. We Tau pilled them, and then they're like, okay, how do we get involved in this? How do we, and I was like, okay, this is great, because we realized that there was a small issue with our last incentive mechanism or last subnet idea, which was that we were targeting Bittensor miners, right? As in like, hey, miners, come onto our subnet and build machine learning models to predict match outcomes. What we found is that a very small percentage of them actually knew what the sports were, what the leagues were, what the rules were. And so building models without understanding the sports and the games itself led to not as like the performance that we're expecting, right? They were okay, but nothing to, write home about. So what we realized is that we needed to open up mining to absolutely everyone. We needed to open up that floodgate so that we get anyone who has any kind of intelligence or edge or can build models to be able to come on, mine, and provide us that intelligence. And so that's what we're doing. And that's how we saw the partnership with Polymarket, is that we can speak to their, millions, tens of millions of users, and to say, hey, you can actually, trade on our platform as well, even, it's the same thing as trading on Polymarket. But, you get paid more. You get rewarded more if you're good. And so by opening that up, essentially you're just like widening the net, which means the possibility of intelligence, the possibility of good, real intelligence is much wider than the Bittensor community itself, or the Bittensor miner community.
Yeah. Can I add a little flavor in there? Do we have?
Yeah.
Yes.
I love
So
flavor.
I worked for very big gray market desks in America. Before PAPSA was passed in America, you had to bet through gray markets in Costa Rica because America banned betting. But now it's legal in America, so it's fine. But when in that time when I was working for them, there, as a quant, they were betting, the movers were betting, 6 to even 7 figures a game on NFL. And the problem is that they're playing whack-a-mole with accounts, because the minute that a traditional sports book finds that you are plus EV, that is, you have an edge plus expected value, instantaneously banned, and your accounts are banned, and you're limited. I think I could bet like $1.50 on William Hill, I think, myself, in the UK. So Willie Hill, always great, but the idea is that it's a travesty for these people who are betting, $10 to $30 million in volume every day. Every day they're happening, and they just can't get down. They can't get that money down. And Polymarket is very different than those guys, because they're open and you can bet everything into their AMM. As long as there's liquidity, you can eat it up. And so the general goal is to bring those professional family desks with, $80 to $150 million in bankroll into a platform like this, where they're starving for a place to get their outs, right? We call it getting outs, is when you get down on your bet. So they really have no place to go, because the TradFi is really squeezing them. And so when you have Kalshi, and you have particularly Polymarket, which is the best, and you have these guys opening up these markets, and they're winner friendly, they're friendly to winners, because it's just an AMM. Now they have a place where they can deploy their liquidity. And that's why things are blowing up so big in the prediction markets. They're getting crazy because these guys are figuring it out, and they're leaving that gray market world for a legitimate out. And so just imagine all that volume is starting to move to prediction markets. And then you tell these guys who have, like 15 me's sitting there doing math all day long to make sure that their odds are they're trying to develop an edge on the odds. You can just imagine that, they come, and then you just tell them, oh, look, if you just route through us, we will pay you alpha token, which is just a store of value for your information. We take the fee, we push it back, grow the value of that token, and these guys just push more and more volume. So that's really the goal here, guys, is to get those folks
To incentivize to hold your alpha and not sell it.
Yeah, don't sell because we're cycling your bets that you would make anyway into these huge markets. You're just making them anyway. Might as well make them through us, and then we'll store the value of your plus EV information in a store of value token. And that's kind of how we think about it. Sorry, I just wanted to add that flavor.
I like that. Why is Polymarket better than Kalshi?
So we want to be very careful with what we say here. I would say let's kind of take a step back. The Polymarket isn't per se better. I would say they're tackling two different markets, right? Polymarket is a decentralized permissionless platform built on blockchain, right? Whereas Kalshi is more of a Web2 platform, right? They don't have crypto rails just yet, and they only operate in the US. So Kalshi targets the US mainly in sports and mainly Web2. They partnered up with Robinhood, and that's really allowed them to reach the masses in the US. Polymarket is crypto friendly, crypto native, which is the reason why we started off with Polymarket. The partnership is there because we aligned with the values of permissionless and decentralization, and we're crypto companies, so we're aligned on that one. Just the reason why is because we are a layer on top of prediction markets, right? And that's plural markets. Right now, we're partnering with Polymarket, primary partner in prediction markets. But there's opportunities for more, and we've been speaking with Kalshi as well. There are some developments, obviously, but there are some also limitations with working with a Web2 company. The thing with Kalshi is it requires KYC. You need a social security number. You need to put in all your details. We don't really want to push that onto our users as well. So we're actually working with Kalshi on like what it looks like in terms of an alternative to that, and to offer a crypto native, a crypto rails version of that within this partnership integration. So yeah, so I don't want to say
Someone very quickly in that.
yeah, so there wasn't anything. There's not any particular like this is better, this is worse. We're pushing. We want prediction markets to succeed, and yes, Kalshi and Polymarket are both the biggest, and they're doing the most, to be honest, for the prediction market space. So very appreciative for them.
Think too, Leo, about like the 0% fee to that really matters in an information science format where there's no friction for information to flow into Polymarket. No, there's tons of friction for information to flow into, we're not going to say Kalshi, we're going to say traditional sports books. William Hill charges a 9 to 13% fee on the dollar.
Yeah.
And Polymarket charges zero. So their gate is fully open for the river of global information to flow into their databases.
Yeah.
Kalshi is a little more friction because so that's hard for us because there's a little, but we can work with them. And then the traditional sports books, I think in UK there's a Coral Bet. I think they have like a 14 to 16% fee, which is a 0% probability of winning any money over time. You just can't beat that because the fee is too draconian. So just think of it as friction to the flow of information. Information is a river, and that river informs the price, sets the price and the odds of things.
Yes.
And you want that to be frictionless as possible. And that's why we work so well with them, because we can design the incentive mechanism to make that gate a massive free-flowing drawbridge, which just sucks in all the information that is positive, that is qualified, that is its winning data. The stuff that actually shapes that price is what we want, the sharp data. So like Cent would be a good example, that you said.
So if you take Polymarket to the limit, then let's say in a few years' time, now there's no friction. Polymarket could become like an omniscient prophet, like when
I believe they used those exact words. Yes, I think they wanted to become an omniscient prophet.
Omniscient prophet.
But the thing is, like, that's where we're moving towards. That's a future we're moving towards, right? Polymarket was able to reveal the results of the last presidential election before the news media outlets could, before the polls could, right? And so we're talking about information, decentralized information. Anyone can add their information and shape the results of, or it gets us closer to the truth, right? And that's what we wanted. That's what we wanted to kind of use as like our little tagline is we're incentivizing truth. But essentially, people are looking to Polymarket and prediction markets as more of a reliable source of truth or reliable source of probability of an event happening, more so than the media. So that's what we're moving into. And the reason why the reason why people are looking towards that, or that Polymarket is able to do that, is because of all the information that is within these trades, within these bets. That information, that's the gold, right? Information is the new spice, and the spice must flow. Had to throw that in there.
I like that. Mark's been awfully quiet.
Yeah,
Mark,
I'm so curious, Mark.
What's going on in that head of yours, mate?
No, well, I mean, listen, I think I've got this. So, but I have a question. How does Polymarket make money?
They just fundraised. They've only just fundraised.
What, they're just burning cash?
Essentially. So all that they've raised, hundreds of millions of dollars to obviously run this thing. They've been around since 2019. And that's been their run rate, right? They just keep raising. Most recently, there's rumors they've been valued at $10 billion. And so their business model, their strategy is like to get as many users as possible, lost leaders, right? You're paying out a lot of money to get users, to get the volume, to get the information, right? And which makes them the ground truth, makes them the source of truth, that people start using them. And then they can, what they're doing is they're now re-entering the US market. They can switch on a fee just for the US market, and they can start, generating revenue. And so this is what Kalshi has done, is they've charged a fee from the very beginning, which is what Stephen was saying. There's friction to use it, but that's driving the revenue of Kalshi, and they're able to operate on fees. And that's going to be similar to what we're doing, is we charge a fee, and that's where the revenue comes from.
Yeah. So this frictionless area won't be here permanently then? It's just for...
Well, it depends on their marketing strategy, or it depends on their business strategy, essentially. They could leave the world open, and then the US is their money maker, or they could introduce fees in the rest of the world. But they have built what they have built based on the zero fees so far. And because there's so much competition right now, a lot of prediction markets popping up as well. There's a lot of fighting for market share. And so if you introduce more friction, you're obviously losing market share in some way, shape, or form. So they're obviously thinking about that as well.
Also, just a little flavor again, Mark, for also Elon Musk and X partnered as the official partner with Polymarket. So the advertising revenue, it's probably so big that my poor little mind can't wrap around the advertising of this ground truth, because Elon's all about truth, apparently, maybe perhaps. And so he wants to take that data and push. So Twitter pays them stupid money for access to this adverse selective information, that is, to make sure that their Grok model gets the ground truth, because they don't care about the fee stuff, because it's biased. It's for a fee. Polymarket is totally unbiased. And so you also got to understand that Donald Trump and the US government literally not Donald Trump, but Donald Trump Jr. on the board of Polymarket. Like literally, the guy sits there, and what they're trying to go for is ground truth economic information. So they don't want to rely on things like the Fed, which is often wrong with the things they do. So the government,
there is in Europe. Yeah.
Yeah. And even Europe is going to do this now with Polymarket, I'm hearing in the grapevine. I can't say for sure, but these economic, macroeconomic players, they want that interest rate predictions. They want those PPI and CPI predictions, which drive trillions of dollars into our Bitcoin markets, as you know. And so you can imagine a guy like Synth guys like Synth come in with all of this beautiful options and features data, and they start informing Donald Trump Jr. where the market's going to go. You can sense that the governments of the world will become the customers. So you can continue charging the 0% fee, and you just make money off of your advertising and everything that values truth.
Everyone will be close to the omniscient prophet.
The profitless omniscient.
The Moed. That's what we should rename our subnet to, the omniscient profit.
So, what do you charge your 1% on? Is that just if on every wager? What's it on?
Trade, yeah, every trade, every bit of volume is 1%. So if you put in $1, we take $1. That's it. So the 1% is very, very little compared to a lot of prediction markets out there who kind of operate on it.
If I put in $1, you take $1.
Yes, correct.
Dollar, you take for a cent. Oh, sorry, 1 cent.
1 cent. Sorry, $1.
Okay.
I was thinking $100.
The beautiful thing about clarity sometimes is that it's completely wrong, isn't it?
If you put in $1, we take the whole dollar.
Yeah, I was thinking this is going to be extraordinarily profitable.
Revenue search tick.
We found it.
So the dollar, the dollar analogy is we take a cent, and that's kind of it. That's the lowest in general along a lot of these prediction markets. Obviously, excluding Polymarket. But that fee, that 1% fee, is actually it's almost like you're paying that 1% fee to be able to earn additional revenue, additional profit on top of that in alpha tokens, and only if you're good, right? So you could give it a shot and go, I'm going to try and bet, and I'm going to try and make money on this and earn the alpha token commissions. But if your ROI doesn't reflect that, then we're just taking your 1% fee and we're funneling into the alpha token, and then whoever actually is winning and earning the alpha tokens are actually getting increased value of what they're earning. So that's, I think, which we've designed this to be a beautiful kind of flywheel, that as long as there's more people betting, then we get more revenue. The revenue goes into the alpha tokens, and then people who are betting, who are winning, get more, and so then everyone wins and is happy.
Okay, so we let Polymarket worry about itself, and it seems to be doing a pretty good job of it.
Yep.
But what they really want is to become this place of truth, this place where everybody can look, and there's this frictionless market where people that have got an opinion on what's going to happen can back that opinion. They're not like Nostradamus just going, hey, all of this stuff's going to happen. They're actually backing up their conviction with cash, with their own
financial stake. Yes.
And Polymarket want that, because the more volume they can incentivize, the closer they are likely to get to the truth.
Correct.
And what they've done with you is they've said, okay, if you're going to bring in more volume, we'll incentivize you to bring that volume in by allowing you to charge a cent in every dollar.
Correct.
On anything that is on your layer, which is built on top of Polymarket, and that brings all of that in. And then what you've got these lovely guardrails that look at what those people are betting and how good they are at betting, and whether they're wild bets or sensible, well-researched bets, and what their history tells you. So you work out what the value of that prediction is that they are betting.
Yeah.
And then you reward them with alpha, but only to the level of the revenue that you've got coming in. So you're never out of pocket.
Mark, I love like music.
We need you to explain that for everyone else, that we're all the investors and all the VCs that we speak to.
Just clip that.
You don't know that. Yeah, that was beautiful. Yeah, it might have taken you an hour and 7 minutes to get that, but that was beautiful.
So it's all got to go in. It's all got to go in. But it makes sense when it's all together. You guys have turned up and you know it all.
Yeah.
But we don't know it all, and we don't pretend to know it all. And Siam, who is our master of subnets, has learned new stuff about alpha emission distribution today that we didn't know. And with this imperfect information, imperfect understanding, it's very, very difficult to articulate the truth. But once you've got it all, you can have a go. So now,
there you go.
Now, you've got so many natural steps, and one of those natural steps is to look within Bittensor at the other subnets that are prediction subnets, that are forecasting subnets, and allowing them to not just reward their miners on their subnet, but also to benefit from the work that they're doing by backing their conviction in their miners and their miners' outputs on your layer on top of Polymarket.
Yeah.
All of which,
Yes.
Elon.
There you go, Mark. There you go. That was beautiful.
Anyone that's willing to put money in their mouth, they can monetize it.
Yeah. So I mean, we were doing this last year. We took our miners' predictions and we were betting on them to show our conviction in our miners, to show that this is, we have intelligence, we found intelligence. We think that's a very powerful thing to do. Once again, financial stake is conviction, right? And so if you have conviction in your own subnet and your own miners and their outputs, then put money behind it. It's very, very simple. And we know that most of the prediction subnets will do that, right? We've spoken to them. They will, because they're confident, right? And we just want to give them a platform to be able to do that as well. It's part of what Almanac is about, is showcasing to the world what the Bittensor subnets, the prediction subnets, are able to achieve through the lens of a prediction market, right? So, and once again, it really helps distill the information, right? And if we're talking about options from synth, what that means would be like, what price would Bitcoin be at, a certain time, and you would see them trade into that. And that's very easy for someone to understand rather than try to explain what synth does, right?
Yeah. So when do you start pushing volume to Polymarket then?
As soon as we finish building out the incentive mechanism.
That's really done though.
It's already been designed. Now we need to code it up into the framework of Bittensor validators, and then we'll deploy. So essentially, I don't want to put ourselves trapped in a time. We all know how this works, right? You set a deadline and it never meets it. So I don't want to get anyone's hopes up, but it's more weeks than it is months. Let's just say.
Cool.
Yeah,
And
it's more weeks.
okay, so that's pretty cool. Now, obviously, I'm going to have to ask this question because others will be thinking this. So, Subnet 44 Score a few weeks ago said that they've made a partnership with a hedge fund, a sports betting hedge fund, and that that hedge fund's going to be betting based on their signals, etc., and then Score will get a cut.
Yeah.
When I guess you guys can do that now as well, right? Do you have hedge fund contacts? Can you not just funnel tens of millions of dollars or hundreds of millions of dollars of volume via hedge funds through you?
Yes, we can do that. 100%.
And sports betting death. Yeah.
And yes, yeah. So Stephen has a very extensive Rolodex of sports betting funds and individuals and entities that are looking to deploy in something like what we're doing. What we actually are is like where those funds would deploy their money as well, right? So one of them would be, the one route to this is like, we're going to give you a bunch of money and then you go trade. And then the second route is, hey, Score or Sire, is trade on Almanac with the hedge fund's money. And so we're able to be both of those things. And that's kind of like the beauty of it.
So just run that by me again. So why would it be beneficial for Score to put that volume through Almanac again?
Well, I mean, if it's Sire, for example, their agent that trades using sports betting information, they would become a miner, right? And so they could earn outsized rewards based on their trades. They aren't trading anyway, right? They're trading on, and knowing these funds, they're probably like, okay, can you be a bit more not so crypto heavy, maybe go on to like traditional Web2 sports books. That's very difficult, right? To try to route a lot of money through traditional sports books, like Stephen mentioned earlier, you get limited, you get shut down, you get kicked off, you get banned. And so it's very, very difficult to route all this money through a traditional sports book. So therefore, prediction markets, one like Almanac, for example, is a much better option for them.
Interesting. So I'm just thinking of other subnets like Mantis or any of these other prediction subnets. It's like creating a subnet to create best possible miner for you guys.
So essentially, yes, yeah, and Stephen met up with Barbarian last week, was it? I think it was Vienna, when we did the Numerai conference. They hit it off really well, and we love Bob. He's a great guy, very, very smart, and there are a lot of synergies between our subnets that we've discussed and are going to implement. And it's just like they are one of, right? They are a very strong prediction subnet. We like what they do with their incentive mechanism. But once again, prediction subnets are all welcome,
So, because Simon and I know James at Synth pretty well, and we did a revenue search with him not so long ago, and he is placing bets on. Was he placing bets on Polymarket or Cauchy, Simon? Which one was it?
I can't remember. It's one of them, but they're actually, they are placing.
So he said on the revenue search, he told us that basically he's placing bets with money, and it's working out, and they're making quite a lot of money because the bets are pretty good.
And they're going to share their wallet soon.
And they're going to share the wallet.
Yeah.
The reason why he couldn't share, even though we asked him to, we were like, well, could you share that information with us and we'll place those bets? And he was like, no, because there's not enough volume for that to happen. Is this going to be a solution to that?
Well, if they're already trading on Polymarket, then the liquidity is going to be very similar, right? And so if the liquidity is the issue, then potentially it won't be the solution. But we're happy to have a chat. Stephen, you've talked to James many times before, and we would obviously sit down with them and speak to them and be like, okay, what's the actual issue here? Is it actually liquidity? And what that really means is like, okay, if you're talking about Bitcoin price prediction markets, we're talking like millions of dollars in liquidity on Polymarket. And so if that is not enough for them, they're trading serious size. And if there's yeah. And I mean, that to us means insane conviction, right? And so what we'd do is probably work with them and see, okay, how can we help you guys by being the platform for you to make those trades? If it means we need to integrate with more prediction markets to increase the liquidity that we can aggregate, that's also a possibility.
Okay. Yeah. That makes sense, because they were looking at changing the epoch of the time, the epoch of the prediction, the epoch of the forecast, to create another market that they could then bet on. So then there's more stuff to bet on. So I find that really interesting. I'm pleased that you're talking to him, Stephen. That's very, very good. Okay, listen, I think we've got a pretty good understanding of what you guys are doing.
Yeah.
How much money are we going to make here?
Yeah. So that's a good question. That is a very good question. So like I said, Polymarket is doing roughly about $1 billion of volume per month. Cauchy is bordering $1.5 to $2 billion a month. So we're talking insane amounts of volume. And so if we're trying to capture like maybe 1% of that, that's about 10 million in volume. And if we're capturing 1% of that in fees, that's about $100,000 a month, right? If we did about $10 million in volume per month, right? And so that maths kind of checks out. It's pretty basic, but it's also a speculation, right? Are we going to be able to capture 1% of Polymarket's $1 billion volume? So what I can tell you is that we have a case study, right? So there's a exchange or prediction market called Limitless, and what they've done is they've tried to create a trading competition, and essentially they said, hey, we'll offer you $10,000 in this week if you come and trade on our platform. And so they offered $10,000, and they saw that there was about they were able to incentivize $5 million of volume in that week. And if you kind of extrapolate that, then that's, I don't know, 150 million volume per month. And then if you take 1% of that, that's 1.5 million, right? 1.5 million in revenue per month if there's 150 million in volume per month. And so they were only offering $10,000 to incentivize $5 million of volume. We're able to offer about $100,000 per month based on our emissions rate right now. So, I'm not really good with maths here, but if we're offering about 10 times the amount in incentives, and let's just be, conservative and say we'll do a 5x on their volume, we'll do $25 million of volume per month. $25 million of volume per week, right? And then 1% of that is $250,000 in revenue per week. That is a very real possibility. It's already been shown and proven to have happened, and we have been making a lot of connections and networks within the prediction market space to onboard entities, companies, traders, funds to come and trade on Almanac. We've already started doing the groundwork, and with Polymarket support, we're able to reach their audience very, very easily, and all their builders and all their traders as well. So
Yeah.
I hope that answers your question, Mark.
Little flavor too, just to give you guys an idea of the scale of the gray markets. Sorry, Leo, I just wanted to tell you that there's even more money in the gray markets, because what the desks do is they don't want to feed the information to Pinnacle or William Hill, because we don't want to give them the information. So what they do, they'll call you up. I want 4 million on the Chargers this Sunday. Can you counterparty me desk number 2? And so they all that money is matching up. That's on a NFL Sunday. You can do like a $1.2 billion in volume. Yeah, between just the desks alone, which would be,
Well,
10 fees. Like on an NFL Sunday, on a big Sunday.
Yeah.
Yeah, Sunday, pretty big. NFL is like the big one, okay? And NCAA college basketball is for the Final Four is like just so much money, I can't even wrap my mind around it. But it's all traded interparty and not so you don't feed information. So if you incentivize them properly and pay them well enough in the alpha token, you can bring those desks to the platform, and then they can match up liquidity and get the counterparty on Polymarket. And like Leo said, very smart, by the way, linking all the prediction markets as one so that your liquidity gets so big, and then these boys can come in and do their NFL Sunday bets. That's the real end game for us, where we're doing $10 million in fees on a Sunday. That would be my holy grail, and I would retire happy in life if we could build that.
Wow. When do we get to see your new Ghibli cartoon pics, Stephen?
Well, Leo will probably publish our Git books. We have our incentive mechanism ready for you to look at after revenue search. And there's many nice, lovely Ghibli pictures in there, which I made with AI.
All Japanese speaking ones, yeah.
Yeah. It's amazing. They can just do these crazy Ghibli AI, like the text to image is, because I'm an AI guy, it's just so fascinating that you can make Ghibli Siam and Ghibli Mark in like 5 seconds, and it's like looks real, like it's like drawn by the studio. Blows my mind that we're there with AI now. And yeah.
Cool.
Yeah.
All fees going into buyback.
Correct. Yeah.
Jesus
Correct.
Christ.
We don't need the fee. I mean, look, we have been a community first subnet, Bittensor first subnet since the day that we launched. We appreciate what Jacob and Al have done and Bittensor, and the whole point of Bittensor was to fund us to explore these ideas, bring them to life, and then repay that to the Bittensor community, right, or Bittensor itself. And so, we've been able to operate for just over a year now, and bringing in some revenue, but obviously not enough to offset all the emissions. And so it's only kind of like our duty to return all of that, in the foreseeable future right now, because we can. And the way that we designed the incentive mechanism is that we can actually return all of that without sacrificing, our operational expenses. And we can even tweak it to the point where we're earning more fees than the alpha emissions that were coming out. So there is excess in fees that we could either buy back tokens or go into operational expenses, treasury, bankroll for trading. So that
You know what you do with the alpha just yet?
Well, we'll most likely burn it for now, because that's just the most logical decision right now. Because it earns the most trust if you burn it, because hey, we can say, hey, we're going to hold on to it, but trust us, bros, like we're not going to do anything with it. But nothing is more trust me than I've just burnt it, I can't do anything with it.
Yeah. Ad hoc or algorithmically, daily, like what schedule?
Yeah, we're probably gonna try and code it up and have it done like Shoots does it, which they've done really well, and speak to John Durbin about that. But that is our CTO existence question there, which I don't want to make any promises that we can't keep on this. I probably already said too much, and he's probably going to kill me. But yeah, that's kind of how it works. And last kind of thing that I wanted to mention is that we want to make it very attractive for our miners, right? People to come, and the incentive itself is obviously, if you're good at what you do and you trade, you earn profit based on trades. And then on top of that, you actually earn alpha tokens if you're good. And on top of that, the way we've designed Almanac is that it trades through Polymarket. And so there is almost been a confirmed rumor that Polymarket is going to release a token, the Poly token. And so from what we've heard and the communications that we've had with Polymarket is that to earn this token, you need to have activity on Polymarket, essentially trade on Polymarket, where they're incentivizing that through the Polymarket token. So if you mine on Almanac, then you'll actually be increasing your activity on Polymarket at the same time. So you will be eligible for the Poly token. And so that's your additional incentive on top of all these incentives that we've already given you. And that's for the miners. And for the holders, we have a very extensive trading history on Polymarket. We've done 500,000 volume on multiple different wallets through the last year since 2024. And we'll continue to drive a lot of volume through Polymarket and build up that activity on our wallets. And what we're going to do is we're probably going to end up getting a whole bunch of Poly tokens as well. And once again, we don't need them. So we're probably going to create a system where we can distribute those Poly tokens to our alpha holders as well, give them more incentive to invest, to be part of our journey, and also to say thank you.
Wow. Okay. So any last questions, Mark?
Yes.
I'm
runway. What does your runway look like? Are you going to be sustainable enough to get to this point? And are there any other stakeholders, any equity holders in a top co that we need to know about?
No, well, our runway is very, very comfortable. It's up until next year. Given, very grateful for the price action. Obviously, our runway is dependent on our alpha token as well. And, in the last week or so, our runway has extended, let's just say. So we're very happy with that. There are no entities, no OTC deals, nothing like that in terms of, we're just a community first. So all the buying and selling you see on our charts is just community. It's just people. So yeah.
Fantastic. Yeah, that's me. That's me done there, Siam.
Nice. Brendan just had a good comment. Delegate the stake to a burned key compounds the deflation by making the burn capital efficient.
Nice. Yeah. But yeah, we could also stake that to a key that is multi-sig. Sorry, we could do a multi-sig key, and then we can also have that staked so it actually earns emissions through the validators, and then just burn all of that completely. Yeah, so that we can actually keep burning more of the supply.
Blimey. Well, we 2 new records today, guys, and this is down to just you two. The longest revenue search, 1 hour and 28 minutes so far, now 29. And this is crazy. There's 2,091 live viewers. Hey. That's insane. Yeah, that is insane. And yeah, I mean, we've been chatting for ages, Stephen. It looks like I've truly shat the bed here. Because we haven't bought any Sportstensor. Like, let's chat the bed.
I mean, there's still a lot. I mean, our runway, our vision for this is obviously years and years and years, right?
Yeah.
And as long as we're with Bittensor and we're operating with the Bittensor, we're going to be returning that value, and we're going to be, very grateful for anyone who's along the way with us. And you can hear from the horse's mouth that we're committed to what we're doing, and we think that what we've built so far and what we're going to build also is quite novel and innovative. And really, the numbers are just going to prove that. That's what we want to say.
Can I just say too, Siam, just thank you very much. Like when we were down only and nobody paid us attention, And we never had a single positive thing said about the subnet because our heads were down and we were working. You were DMing me. The revenue search team was very supportive to us just through the DMs. And, you always said, keep going, just keep going, and do your thing and don't worry about anything. And I just thank you for that because that's just a very nice thing. And I encourage any subnet who's starting out to get in contact with revenue search team and just talk and just get to know people. That's relationships are the true value, not the alpha token. Well, the alpha token is valuable, but it's the relationships that you make, I think, and the good ones, where people are motivated to make Tau better than it is. And that kind of circles back to our very first comment on this longest ever podcast, that, everything that we say and do is to make Tau better, to make it sustainable, to make it invincible versus the bear market. And we hope that our subnet is that, because sports betting never dies. That's the great thing.
The boomer buzz does.
Always.
Yeah.
Yeah. Oh yeah. Any prediction markets. Yeah. Sorry.
Drug, porn, and gambling are the things that boom the internet. Maybe those. So
Yeah, we're trying not to associate with those, but we can agree on that. Yes.
well, thank you so much for your time. Genuinely, this has been absolutely mind-thrilling. Lost for words, but yeah, I've had.
He's lost for words, but it has been a really good revenue search. Thanks, guys, for the effort that you've put into it. It's clear there's been some preparation there, and we are grateful for that. And I know that our audience will be grateful for that. Has been a record-breaking revenue search, longest one ever, most viewers / listeners ever. So we're grateful for that. Thank you for your time, for helping us to understand what it is that you do. I think we've got a pretty good grip on it now, and in turn, hopefully everybody listening has too.
Yeah.
We'll be back for another revenue search at some point.
Yeah, for sure. Yeah, 100%.
CBC.
Yeah.
And you guys will be back on one once you're ready to go.
Mm-hmm. Thank you very much. Yeah, we would love to come back on, especially once we've launched and everything. We've got some hard numbers to share with you guys. But yeah, once again, thanks again, Siam, Mark, all the listeners out there. Yeah, it's been fun, and I'm glad we can finally do this.
Nice. Come back when money comes in. Shout about it. 200%.
You'll hear about us. Yeah. Thanks, guys.
Found.
Right.
Thank you.
Appreciate it. Cheers.